Hi, George Masson and Mortgage Pro here again. We're going to talk in this video. This is going to be a little longer than usual. We're going to talk about mortgage interest rates, closing costs, and home prices, and how all these things are related as you're going through this home buyer journey. So, first and foremost, let's talk about mortgage interest rates. Um, there is no firm guarantee of what rates will do. What you do when you're discussing mortgage interest rates, you could look at a market over time and make predictions. So everyone is under the impression, that rates are going to come down, and I do believe they're going to. I don't think it's going to be anything dramatic. If you look at the average mortgage interest rates over the last 30 years and you average it out, it falls somewhere in the middle sixes, right about where we're at now in today's current market. I do believe they will get better. Point is that everyone has this perception of what was going on years ago. 3, 4, 5 years ago when rates were 3%, and is hoping that's going to come back. I don't honestly believe it will. I hope that it does, but I don't believe that it will. The reason why I mention this, one of the things I hear all the time from people that are in the market to buy a home is, I'm going to wait till interest rates get better. And the problem with that statement is as follows. Number one, there's a relationship between interest rate and home prices. It's simple economics of supply and demand. If assuming for sake of arguments, interest rates came down dramatically, more people that have been sitting on the sidelines going, I'm going to wait for interest rates to get better, now step into the marketplace to buy a home. Well, now there's more people in the marketplace or a high demand, but still the same supply or a limited supply. So since there's a limited supply and a high demand, home prices come up. So the truth of the matter is that you should never try and time or try and beat the market. The reality of it is that you buy a home, you get the best mortgage term and interest rate that you can afford and make sense at the time that you're buying. And if and when the market improves, you then execute a refinance and get the better rate if and when it becomes available. A very good example of why this mentality of waiting for rates to get better is not good. For sake of argument, if you're looking at a house today that is selling for 300,000, well, as we know, real estate goes up in value over time. Again, there's no firm prediction, but we know that. So meaning that if interest rates come down, or there's an extension of timeout from today and the value goes up. So now that $300,000 house is $325,000. Well, even if the rate comes down a full percentage point, the payment with the lower rate of 325 in this example will be approximately the same than if you bought today at 300,000 with a rate in the middle sixes. So the reality of it is you're just going to pay more in the purchase price and lose that equity. So don't try and outpace the market. Secondly, we'll talk about closing costs for a second. Interest rate certainly is important, but you really need to understand the math underneath. Um, a lot of times when you see interest rates that are advertised, and you can, next time you see an internet ad or something, and if people still are reading newspapers and the newspaper stuff is advertised, read the small print and you'll see stuff like must be a 720 score or greater, 60% LTV, meaning a 40% down payment, and all this criteria that is not the norm. So it's misleading. And then there's something next to the interest rate, a slash mark called APR, or the annual percentage rate. And the bigger the spread between the mortgage rate and the APR, the more costs there are. So again, you have to understand how the math works, because a lot of times the interest rate that you see or the lower interest rates that you see involve the highest cost. Sometimes that makes sense for the right consumer and situation, sometimes it doesn't. But to have a clear understanding of what the math is and to have a mortgage professional go over that math and your options with you is key to make sure that you're getting the best mortgage at the best cost for your situation. I'll discuss very too quickly. There's all this talk of, you'll hear these terms, first time home buyer. And you, the consumer, thinks that means it's a special program and you're getting something unique. That's not the case. It's really, in my opinion, a marketing ploy, because all it means is that you have not owned a home in the past 3 years. The mortgage criteria is the same. There's no, you get a better interest rate, you get lower closing costs, you get a lower down payment. No, the mortgage terms or the mortgage terms, it just means you haven't owned a home in 3 years, but you think you're getting something special. So don't fall for that either. Um, Home prices. Um, we have seen, now again, different pockets of the country and different areas are different, but we have seen, um, prior to this year, although we're in the beginning of this year, um, homes were selling very quickly. In many areas, they were selling above list price. And now what we're beginning to see, houses sitting on the market longer. They're selling at list or below. I think the craziness and the hypeness of the market has died down. And all these different factors come into play. There's another interesting statistic right now. This is, again, you can research it. Right now, 64% of all mortgages that are open or outstanding in this country are at an interest rate of 5% or below. So, what has happened is many of those homeowners, because they got that low interest rate when it was available, don't want to sell their home because they're going to step into a higher rate. As we begin to see interest rates come down, now those people are going to go, now it's time to make a move. And you're going to see a lot of homes come on the marketplace. So again, we now go to the reverse. Now there's a lot of supply and not enough demand to keep up with all of it. In other words, I'll give you a break it down. There's 10 houses for sale, but only three people wanting to buy. So as a result, you'll see home prices come down. All of this stuff connected, when you look at it, spells this is a very good time to buy as we get into spring season. I'll close with, I'm very particular in the sense of that I like my consumers or my clients to really have a firm understanding of this process. Because my job and my goal, as I've said it many times, is not to get you a mortgage, but to get you the best mortgage for your situation. And having an understanding of how the process works, interest rates, closing costs, home prices, how to negotiate, is what makes sure that you're getting the best deal for you and your family. So over the course of the past few days, you've received some videos that goes over a lot of topics. We have a call scheduled to speak. I look forward to that call and helping you to become a homeowner and to make sure that you get the best mortgage for your situation. Thank you so much. I look forward to our upcoming call. George Massey, the Mortgage Pro.